people out there, including Mr. Dave Ramsey, who like to tell you that annuities are not good for your financial plan. Now, this is the thing, and you're going to hear this at my channel a lot. No financial tool is either good or bad. It's just like any other tool. They have a certain job. And once we know how that tool works, we're better able to use the proper tool in the right situation. So I'm here to tell you a little bit about annuities so you can decide if this is something that will work well for you. And these are particularly important for people who are planning for the income stage of their retirement, where they're going to start to liquidate their savings and need to be able to use it for income. And for that, annuities offer you a very valuable feature you're going to want to hang on for till the end. So let's get to it. I thought I'd start out reading from Dave Ramsey's book and give you what he says about annuities, and we can start our discussion from there. I found this, and granted, I have a pretty old copy. I did get a newer one via audiobook that I walked around and listened to, and I didn't find that it was really updated, which is a darn shame because Dave Ramsey wrote this in the 1990s, and he based much of his strategy on what was going on then. And the reality is things change. Interest rates go up or down, the stock market does too, new products become available in the financial arena, and as a result, the book might have been updated a little bit more. In my copy of this book, on page 131, it talks about annuities. Annuities are simply savings accounts with a life insurance or financial institution. It's my belief that I think they're exclusively with insurance companies because it is an insurance contract. There are certain things that the insurance company are insuring, so you would only find annuities through insurance companies. Back to the book. They are not insured by the federal government. This is true. What he's talking about here is FDIC insurance, right? That you would get through a bank account. But your mutual fund is not FDIC insured, and neither are a lot of other things. Now, there are other forms of insurance, though, that can protect your investment. In fact, when it comes to annuities and the cash value in a life insurance policy, these are guaranteed by the guaranteed fund in your state. As a result, even though they're not FDIC insured, they still can offer you protections. Back to the book. But they usually pay more than banks do on savings accounts. This is very true. Even if I have a fixed rate annuity, and there's different kinds, we'll talk about that, the interest rate that's going to be paid on your annuity is more than a standard savings account. Life insurance companies are not as financially strong as they used to be. Dave. In the 1990s, insurance companies went through a pretty big shakeup. Most of it was due to the junk bonds. They were putting a lot of money into risky bonds. And as a result, when these bonds defaulted, they lost some money. And this caused recovery problems for a lot of companies. But again, since Dave has not updated the book since the 1990s, he's still giving people this advice. And that's not to say that insurance companies might not have solvency problems. They could. But again, as I mentioned earlier, most states have a guaranteed fund. And this is the other thing that's happened in this industry. You see, when insurance companies start to see some of their brother or sister companies, some of the other companies going through some financial hardship, the bigger, the stronger companies generally gobble them up and they take over the accounts so that the industry as a whole doesn't look bad. And I use air quotes here, doesn't look bad, because it does look bad when insurance companies fail, right? And it makes people skeptical of the entire industry. So the entire industry helps each other. It's a little bit like the other financial institutions that we saw during the 2008 mortgage crisis when they started to buy up some of the failing companies, right? So that the entire industry remains solvent. Back to the book. If they go broke, and if you have, you could lose your money, all of it. Okay. That's the case with anything. Well, just about anything. I mean, we saw with people under FDIC that FDIC even paid more than that. But we're not going to talk about that in this video. This is the thing. There's some things that annuities offer you that other investment products, or I should say places you can put your money for a return, will give you. One of them is something called tax deferral, where Dave Ramsey's explanation in this book of annuities does give you some factual information. I think there's a better way to look at annuities. You see, annuities were IRAs, individual retirement accounts, before we had IRAs. As a result, a lot of the rules inside of an annuity work very much the same way as an IRA would. One of those things is the fact that the proceeds inside of an annuity are tax deferred, just like your IRA. This means as the money is accumulating, you do not have to report it on your tax return, which means you do not have to pay taxes on it. This means you get a greater return than you would in, say, a simple savings account, like Dave Ramsey described. The other thing is if you make an early withdrawal from an annuity, just like with an individual retirement account, it is subject to a 10% penalty. Something else to keep in mind. These programs are generally used for people moving into retirement. Unlike Dave talking about these in the form of simple savings accounts and greater interest that you can receive, annuities have developed a little bit more since Dave wrote this book. In fact, you can get something called an indexed annuity, which means that the returns in this account are based on a stock index, like the S&P 500. When the value in the index goes up, you get to take advantage of that, but your principal is still guaranteed. Unlike if you were, say, in a mutual fund or directly invested in the S&P 500. You can also get yourself something called a variable annuity, which works a little bit like your 401k. Inside a 401k, you have an array of investment selections. You have some stock investments and some bond investments, some fixed rate investments. The same holds true if you get a variable annuity. Sometimes variable annuities offer you some guarantees, which means you can add something onto your policy that guarantees the principal or guarantees a certain withdrawal amount. All of these options are available too in a variable annuity. So, unlike the example we have here about it being very similar to a simple savings account, annuities can actually offer you greater returns than what Dave might suggest. And here's another thought. When you get all these benefits and when you go with an annuity, you might be paying extra fees. And I think that's why Dave and some other people object to annuities. I get it. But you're going to pay fees in a lot of other investments too. And those of us who are savvy, we look at that and we shop around to try to get ourselves the best deal. And here's the final bonus of an annuity. You see, a lot of people in their retirement plans miss having a pension. A pension guaranteed a certain amount of income, a little bit like Social Security, that you would receive every single month. Employers used to offer pensions, and then they moved into offering 401ks instead. Essentially, employers removed the investment risk from themselves, and they moved that investment risk to the employee through a 401k. One thing that an annuity offers you that no other program does is a guaranteed life income. You can annuitize the value in an annuity and get yourself a life income, a guaranteed stream of income for the remainder of your life. Now, I published a video that talked about all these different annuitization options. I'll put that in the description for you. There's also another resource in case you're interested in these annuitizations called immediateannuities.com. I'll put that in the description for you too. This is the thing. There's going to be a lot of people out there telling you lots of things about lots of different investments and what you should do with your money. I'm not going to tell you what you should do. I'm going to give you the facts and I'm going to give you the information because I believe you can make those decisions for yourself. There's no one who knows your financial strategies and what you should do better than you. So if you like the idea of getting good information that helps you in your financial future, please subscribe. I'm going to be here giving you lots of good information. I also ask that you like this video so other people might see it. And please comment below if you've got any questions or comments for me or other. Thank you for tuning in. Be fearless and have fun. Talk to you soon.